Hello and welcome to Business Television India. This is a special show on what to expect from Infosys second quarter earnings. This will be the first one after the promoter camp led by Narayana Murthy took control of the company with Nandan Nilekani once again at the helm. I'm Muralidhar Swaminathan and with me is our in-house expert on IT, Shail Damania. And we are also joined by a number of guests. Moshe Khatri, Managing Director at Wedbush Securities. Trip Chowdhury, Managing Director, Equity Research at Global Equity Research, Urmil Shah, Analyst at IDBI Capital, and a veteran, Arun Kejriwal, Founder, Chris. Thanks, Arunji, for joining us. But before we get our experts, let's hear from the management on the outlook for the second quarter. Last month in an analyst conference call in New York, Praveen Rao had this to say. Let's hear him out.
As I said earlier, we have not seen any major changes in the commentary we gave at the beginning of the quarter. Even we had an expectation, particularly from a financial services perspective, that in US some amount of demand may pick up and we may see more spending, but that we have not yet seen materializing. The demand in FS continues to be moderate. In the last few quarters, we have done extremely well in financial services. We are extremely confident about our presence and competitive positioning there, and we are very confident that as and when demand picks up, we should be able to get a large share of it. Some of the verticals, industries which are doing well for us, utility segment is doing extremely well. We have had good success over the last few quarters. There is a lot of investment in customer experience. There are some regulatory changes in Europe where they are separating wholesale and retail, and we have got some good wins through that. So utilities continue to do well. We have done well, reasonably well in telecom in the last few quarters, so we continue to be optimistic about telecom. Manufacturing is moderate in some sectors like discrete manufacturing and industrials. We are seeing good uptick. We are seeing good demand for engineering services across all manufacturing sub-verticals. Auto, we have had good success in the recent past, but there is a view that auto sales has peaked and now you may see some sense of a slowdown. We have to wait and see. Aerospace continues to be soft. Energy obviously continues to be soft, and we don't see too much changes rest of the year. Retail is another vertical which we had called out as being very volatile and challenging, and that continues to be the case. We have seen record store closings and layoffs in 2017. So retailers are really struggling. Most of the consumption is happening online, and Amazon, likes of Amazon, is capturing majority of the share. So retailers are grasped with changing both their business model and the operating model, because it's a low margin business and the top line is also talent. So they are going through that phase. It will take a few quarters for them to come out of it. So retail is really a talent. So it's a mixed bag actually, and but this, in some sense, a similar commentary what we gave at the beginning of the quarter.
And between US, UK and continental Europe, do you see any meaningful differences?
There are few things here and there depending on our own client concentration and all, but we are not seeing any secular trend.
Okay. And moving on to the new services, okay, you guys started calling it out, and that's been a big driver of growth. So I think it would be good if you can kind of go through what all are included in new services and what is the kind of outlook going forward.
Yeah, our definition of new services is these are a set of services which were practically non-existent about 2 years back. Since then, it has ramped up extremely well. So between new services and software, about roughly 10% of our revenues come from this. I think new services is about 8.5 or 8.7%. And more importantly, if you look at the incremental revenue in last 2 years for Infosys, we did about $2 billion incremental revenue. The new services and software contributes more than 1 billion of it. So a big percentage of our growth we have seen in the last 2 years has come from these new services. These are broadly around 5 or 6 teams. Digital is obviously out there. Then there is a cloud economy, cloud migration. Then there is a BPM world and API economy. Then there is this cyber security. Then there is this advanced next generation analytics, data and analytics, and so on. These are broadly 5 or 6 teams where we are seeing a lot of traction. We are building a lot of capabilities in these areas. and we are very optimistic about it, and we have started publishing it, and every quarter you will probably see traction and how we trend going forward in these areas.
Okay, that was Praveen Rao sounding quite confident that the management could drive big changes. Joining us now is Trip Chowdhury. Trip, thanks for waiting by and joining us. Trip, what's your first take? This is Nandan's first results after he took over as the non-executive chairman.
I think whatever little I heard from the previous CEO, Praveen, I think they are going to do capability-based reporting, capability-based commentary. I think that is positive. But on the negative side, I still feel the share buyback and dividends is terrible. And the reason I say that is the insiders and the executives should not be selling their stock at the premium. That is sending a very negative message to the investors worldwide. Basically, they are paying themselves a premium, which is unacceptable. So I think we will give a benefit of doubt to Nandan. He's a very smart executive, but I think the higher ground the management has to take is not coming very transparently, because the share buybacks is only going to help the insiders and the executives, not the retail investors. So that is, I think, if they do a share buyback, which they have a premium, it should only be for the retail investors, not for the insiders or the executives.
Yeah, no, your point on the share buyback issue we have noted. We'll come back to it in a bit. But before that, Trip, what's your take for the current quarter? What do you expect from the new management to deliver? Is it going to be flat or mixed, as Praveen Rao indicated?
I think it won't be good. Because remember, finally they are thinking in capabilities rather than in terms of onions and tomatoes and potatoes. Basically, the offshore outsourcing model, the way they have been projecting in the financials, is a total disaster. You cannot run a company on a 20-year-old recipe, basically. So they have to make a transformation, and they have to make a transformation fast and furious. And I think this quarter won't be a good quarter because there has been some management flux, and Infosys credibility has been at the rock bottom because of the many issues and a lot of stupidity of the founders. I think that needs to be fixed first. And I think Nandan will do a good job. We have known Nandan for a while. He's a common sense person. So I think we will give a benefit of doubt to Nandan and his abilities. But the credibility of Infosys is again hinged on one and only one thing. Get rid of share buybacks. That should not be done. Dividend should be stopped. Because think about it. It's a mutual contradiction in what Praveen Rao said. They are doing capability-based tracking, capability-based marketing, capability-based matrices. But how much have they spent on their employees to retrain them? Nothing. Think about it. The amount of money they are doing in share buybacks, you could have created toilets in the whole country in just one quarter. Secondly, if that's not what they want to do, they can retrain their employees so that they can be very productive. There's one thing you can just speak. Other is, do you really have those capabilities? No, they don't. But they can train them. Yes, they have a huge facility in Mysore where they can train the employees, thousands and thousands of employees in 1 month, 2 months. Indians are very smart, but the management is totally aloof.
Right.
I'm talking about
Trip, just hold on to that thought. We'll come back to you. Urmil Shah also joins us. Urmil, I was just looking at the kind of previews this time around. Our own dollar revenue growth expectation for this quarter is of 3.8% growth. Now, if they really do deliver on this kind of a number, it will be the highest in 5 or 6 quarters. The last quarter also, I think the dollar revenue growth was 3.4%. So 3.8% will be one of the better quarters that the company would have seen in over a year. But also, as you know, there's been a lot of noise around this company, but coming down to the stock, do you see that the dollar revenue that they had given at the start of the year, do you see them holding on to that number, or do you expect a change?
Yeah, for this quarter, actually, we are slightly lower than the number which you said because we are expecting a CC growth of 1.6% and a cross currency benefit of 1.2%. That makes it a 2.8% QOQ growth in this quarter. And as regards the full year guidance, we expect them to cut the top end of their guidance by about a percentage point. So we expect their guidance to now to be brought down to 6.5 to 7.5%.
So, Urmil, to follow that up one, I think your estimates are the most pessimistic among many that we have. Most people have predicted 3.8. The average is 3.8. But you seem to be sounding pessimistic. Why? Do you think because, as Pravin Rao indicated, demand was more or less the same as the commentary that was given in Q1? Do you think the challenges are still to be met and it's going to be tough for the existing management, the new management?
So if you see the number which we are expecting, it isn't significantly lower than what they delivered in Q1 of this year. So the difference isn't very significant. So from that point of view, we are not very concerned as regards any deterioration of the demand environment. But yes, normally as generally second quarter is a very strong quarter. That's not there for the industry, and also Infi is seeing issues which are specific to couple of their clients. So from that perspective, we believe that Infi would do about 2.8% in this quarter.
Noted. Let me now turn to Arun. Arun, you have been tracking Infosys ever since they listed on NASDAQ, and what's your expectation? Is it going to be flat? Will it be dull, or do you think there might be some surprise?
Well, I think one should not expect surprises, but to expect it to be poor or unchanged would be more like it. So I don't think anything much is going to happen. Let's understand, even a change of management, it's not that Nandan has a magic wand and he can just weave it around and suddenly find changes. Look at Infosys over the last 4 quarters. Their top line on a consolidated basis in each quarter has been 17,200 crores plus minus 100 crores.
Right.
So it's as flat as a doormat. If you look at their earnings, they have also been similar in that plus minus 100 crore range, 3,500, 3,600 crores. So nothing much seems to be happening in that company. Given the acumen of Nandan, given the fact that this is his second innings, give him 2 quarters and yes, I would be optimistic. So whether that second quarter would reflect in the January to March or April to June is a matter of conjecture. But to expect anything to have happened in the September ending quarter is expecting too much.
Right. Also joining us now is Moshe Khatri. Moshe, a few questions again, starting off with the earnings this time around. Do you see the management making any kind of changes that they'd given at the start of the year?
We don't. And the theme for this earnings season, the way it was for last earnings season, is stability. So we're not looking for any sort of surprises up or down for the group, and that includes Infosys.
All right. Okay, and what are the few major things that you will watch out for this quarter? Are there any specific points that you would like to know from the management?
Sure. So a couple of things. First of all, one, an update on the CEO search. 2, an update on what management is doing to retain top talent. 3, an update on the company's product strategy. 4, an update on the company's strategy in terms of expanding digital. Are we focusing predominantly on organic growth, or are we going to focus a bit more on M&A? And then finally, obviously, the generic commentary on demand by vertical, geographies, etc. It'll be interesting to see if we get any sort of commentary related to next year's budgets. I think it's probably a bit too early, but it'll be interesting to see if there's any commentary on that. And then the final point is that when we were in India last time, during our last visit, we heard that Infosys was becoming a bit more selective on pricing, and I'll be interested to see if we hear anything on that from the management team.
Right. Also, if you look at the overall picture this year, the company has been in a lot of news, some negative, and of late, the news flow has turned positive. Do you see any kind of client attrition on the back of the uncertainty period which was there at some point in time in this year?
I'll be very surprised if we see any sort of client attrition.
All right. Okay. And if you look at the overall IT industry, how has the overall trend been as far as pricing and volumes go? Not just for Infosys, but the overall industry, how has the picture been?
I would say that we kind of knew 6 months ago that financial services is not going to have that uptick in spending. So it's already embedded in the numbers. That's good news. And it's been embedded in guidance. That's why we haven't seen any negative surprises. And on top of that, we're definitely seeing most of the tier one companies with a more coherent digital strategy. And because of that, you're seeing stability in earnings. These are all positive factors, but this is still a work in progress, that whole transformation away from legacy to digital. But as I said, the good news is that we're definitely seeing stability here for the entire universe.
Okay. Yeah. Now it's quite clear that there may not be any positive surprise or negative surprise. It could be as flat as one is expected. But a very important point, observation, which we have also noticed, and you've been saying this, Trip also mentioned this, the buyback. Now, this buyback math is something which the investors are not really happy about. You don't see huge buying. That arbitrage is still open. The premium is still very, I think 25%, I guess.
So from 925 is the current price.
Right.
And 1150 is the buyback price. And it should be completed over the next couple of months at most, maybe 2.5, 3 months. But that's a good amount of premium that one could get if you buy.
But no, my observation and my question, I'll take this to Arun. Investors don't seem to be buying in the market to take advantage of that premium. What's your take?
Murli, you need to understand, again, like we say the maths. Roughly of the shares that you own or you buy from the market to tender, what would get accepted would only be a small amount.
Absolutely, yeah.
So the balance shares, the residual value of those balance shares would be again closer to the market. So the difference that you get is not significant.
Right.
So let's say, for example, you buy 100 shares. I'm not talking of the retail category, but to make it simple, you buy 100 shares, about 15, 16 shares would get accepted, which means you still need to dispose of 85 shares in the market.
In the market to, you would sell it at a loss.
So that would go at a discount to the buyback price, which doesn't give you that comfort.
Right.
And if you take a hedged position in derivatives, where you sell futures, the involvement of the amount of money that would be there, the margin on that, etc., even though a lot of brokerages have been pushing this scheme that you buy cash, sell futures for the difference, etc., people are not quite happy with the maths that comes. That is the reason why this is not taking off and the gap narrowing.
So the purpose of the buyback, as Trip Chowdhury pointed out, it doesn't really serve the purpose. I think, what's the point? I mean, it was under pressure that they've given the buyback.
Well, they had made a commitment that they would either distribute cash or buyback or a combination of both. So they are returning that amount of money. What we need to understand that this is money going back to the shareholders. It has got nothing to do with employees. And the money going back to shareholders would reduce the equity of that company. So by that extent, assuming that the earnings remain constant, the earnings would go up by about 5% post this buyback being completed. The balance sheet size of the company would get reduced by this amount, and they would cease to have other income which they were rather having on this amount. So it's a trade-off between all these factors. But this is something which is being done for the shareholders of the company. Their money is being returned to them in a more efficient manner than giving by way of dividend, because that would have attracted tax.
Let me take this to Urmil Shah. Urmil, what's your take on buyback? How do you view it, and how do you look at the math?
So I think the share buyback being announced by the company is a good effort to improve the return ratios, and this is something the other IT companies have also done at a time when the sector as a whole is in the transition phase, and most of the companies are building up the digital capabilities. So we are not negative on the share buyback at all. We believe that this is a positive move, and we would believe that it would depend on individual shareholders and thus the founders as well, whether to tender for the buyback or not. We need to keep in mind that like other IT companies, Infosys also generates substantial free cash flow every year. So in fact, we would want a stated payout policy, which the previous management had talked about, being around 70% of the free cash flow, to be maintained, or even given more details as regards that the substantial portion will continue to be towards the share buyback. So we believe that the move of share buyback is a good move by Infosys.
Right. Urmil, as you said, other companies, just to give you a flavor of what other companies have done, Cognizant, these are all recent numbers. Over the last 1 year, they've taken place. So Cognizant, $3.4 billion buyback, Wipro, 11,000 crore, HCL Tech, 3,500 crore, TCS 16,000 crore, Infosys 1,100 crore, and Mindtree as well, a very small number, 270 crore. So these are the recent ones which have taken place over the last 1.5, 2 years. Yeah, you're right in saying that other companies have also done this. But Urmil, I wanted to talk to you about other issues. So we've spoken about buyback, we've spoken about how this quarter is expected to be. Software issues like client additions, attrition, last time around it came in at 21%. Although the street is looking at bigger other issues like dollar revenue growth and margins, but at 21%, that's not a low attrition number by any standard. What are the other smaller issues that you will watch out for when the earnings are announced this quarter?
Yeah, so we are expecting the attrition to moderate in this quarter and also going into the second half. While we are not expecting any client attrition because of the changes at the top management which is taking place, because we do believe that Infosys is a well-run institution. There is a very strong sales engine and the delivery engine, which will take care of the existing engagements. Yes, we were earlier positive on the pickup in the growth. That is what we think might get delayed by a couple of quarters. So we would eagerly watch out for what is the kind of growth in large clients, what is the TCV of the deals which they announce, and more importantly, what is the kind of change in the strategic roadmap for the company as a whole, and specifically for digital technologies. So we would want to understand from Infosys as to how this side should be looked into from the next 2 to 3 year point of view.
Yeah. Okay. Now let me take the question to Arunji. Arun, what should an investor do now? See, the growth this quarter is likely to be flat, as you said. There are small challenges. We have a new leadership. Nandan Nilekani is back at the helm. See, the investor is confused. Sometimes when you're confused, you don't move in either direction. You stay put there. What's your advice for the short term, the medium term, and the long term?
Well, I think you've answered the question in the question itself. There is confusion and there is lack of clarity as to what is happening. If you look at even what the share has done in 12 months, it's done nothing. It is where it is, while the Sensex and the Nifty have given you about 15-16% return on a 12-month basis. In the short run, I believe the best option for an investor is to tender whatever shares will go in the buyback, which will effectively reduce his holding cost by that percentage, because it's a 25% premium that he's getting on even that 8, 10, 12, 15% shares that get accepted. In the intermediate term or in the medium term, I believe Infosys should, under the new management, settle down and take a call after that for the longer term, whether there is a growth vision, whether the statements that are coming talk of the growth, and can Infosys get back to even half its previous glory. But I don't think he should be in a hurry to exit the counter right away. Probably this could be the worst time for him to exit. Right.
Okay. Probably worst time to exit. Don't be in a hurry to exit. That's very clear. Let's wait and watch. Let's see what the management has to say. We have run out of time. Arun, thank you for joining. Moshe, Trip, Urmil, Shah, thank you so much for all your views. That's all we have on this show. Keep watching Business Television India. More news and analysis coming up on the other side of the show.